Data Analytics, How Can It Be Used? Was a live webinar that was originally produced on Thursday, March 29, 2018. For this webinar, we were joined by two of our team members here at McKonly Asbury, Janice Snyder and Sam BowerCraft. We hope that you enjoy this webinar recap, and please visit us online at www.macpas.com for more information about our future webinars and other upcoming events.
Thanks, Dan. This is Janice Snyder. I'm a partner here at McKonly Asbury, and I am here with Sam BowerCraft. And as Dan mentioned, 2 months ago in January, we spent a lot of time on data analytics. We did a presentation, and we talked a lot about the purpose and the framework, but there just wasn't enough time to get into some practical application and some examples. So that's exactly what we're going to do today. As it says there, I'm a partner and I lead the firm's audit segment, so we certainly do utilize data analytics pretty significantly in our audit approach. And Sam, would you like to introduce yourself?
Sure. Good afternoon, everyone. It helps if my microphone is on. I'm Sam BowerCraft. I'm a senior manager. I work in the internal audit management consulting group, and we use data analytics frequently in a lot of our work, and we also support the audit group in some of their analytics when they have questions or want some larger projects done. So glad you could all join us today. I like to give a little bit of background about us at the beginning of presentations, especially for webinars where you cannot see us. So I like to hike, and I added a slide. If you were with us in January, the one slide is a repeat. The one picture is a repeat, but I also thought I would share with you that I like to do Tai Chi. So I've been studying martial arts since I was 12. Primarily, I was inspired to study martial arts because I have 3 older sisters, and it helped me to survive. And the proof is here. I'm alive. So
Very good. All right. As Sam said, Janice Snyder. Before you knew I love gluten-free cooking. I am gluten-free, but recreationally I like to play volleyball. I used to play back in the day, but now it's just for fun. That's it. Thanks, Sam.
Yeah, no problem. Little known fact, Janice has a 48-inch vertical leap.
No, absolutely not true. Let's stick to the truth here today, Sam.
She sails through the air.
No.
So our objectives for today's presentation is to go over, again, we're going to recap a little bit from our prior presentation regarding the purpose of data analytics. What is it really about? How we use data analytics for problem solving, and how to start your own data analytics journey or continue it depending on where you are. So we'll talk about some of the frameworks at the beginning, and then I've set up 3 different areas for case study discussion. And as we're going through this, if you have questions or ideas about areas within your organization, please feel free to send them our way, and we'd love to incorporate those into the presentation. It certainly makes things more interesting. With regard to data analytics, one thing, if you just take a moment and think about what measurable objectives do you have in your organization with regard to data? I like to ask attendees of my presentations to sort of think about how this may apply to your organization or where you work or what you do. So take a moment and think about that. What do you measure? What do you really worry about within your organization? Revenue, sales, accounts receivable, payroll expense.
Are you going to ask them to write it down, Sam? I know you're big on documentation.
Yeah, and you should write it down. Yeah,
Take some notes.
We write things down so we don't have to remember them.
Excellent.
Yeah,
Thank you.
Yeah, well, everyone here at McKonly Asbury thinks that I love to do documentation.
You do?
No, I love to refer to documentation. That is definitely different. I've met very few people who love to do documentation, but everyone loves to look things up. So, yeah, take a moment. What measurable objectives do you have in your organization? Because I think if we write these down now, we can revisit them later at the end of the presentation. So when we talk about data analysis, we want to talk about what that really means. Fundamentally, it's the process of inspecting, cleansing, transforming, and modeling data. And it can be one or several of these items. And we're going to talk about some examples of each of these, whether it's inspection, data cleansing, transforming, or data modeling. And ultimately, these goals are about discovering useful information, suggesting conclusions, and supporting decision-making. Whether we attend a presentation or we're doing data analysis whenever we're doing work and analyzing anything or getting new information, what we really want to use that information for in the future is to make a better decision, to behave better in the future. So ultimately, whether it's data analysis or reading a book or attending an amazing presentation on a Thursday afternoon, whatever it might be.
On data analytics.
Let's not be egotistical, Janice. But whatever it might be, ultimately we want to use that information to make a better decision, because otherwise it's just not very helpful, right? So we're going to bear this in mind as we go through this presentation. A little bit of context. Ultimately, when we're talking about these things, we want to have a strategy, mission, objectives. What are your key metrics? How do you measure these things? If you can't measure it, you can't improve it. That was Sir Kelvin, who was a scientist, and he said, if you can't measure it, you can't improve it. And that's very true, because then there's no benchmark. If you want to be better, you can always look back and say, yeah, I'm better than I used to be. But if you measure it, then you can definitely evaluate it against something solid. Strategies, what are these themes that we're using to achieve those metrics, and activities. What activities support your strategies? In this case, we're talking about using data analytics to support those strategies to improve on your metrics. So using data analytics for problem solving, we'll touch base a little bit on the framework that we reviewed back in January in case we have any new attendees, and it doesn't hurt to repeat this information. Goals of data analysis, the whole process is really about 4 key things. We want to achieve the goal of the analysis, which means we need to know what the goal is. We want to answer questions that were asked. Frequently, the goal of the analysis is to answer some questions or to determine what direction to take in the future. Get some new informational insights. As I said, it's to support decision-making and new behaviors. And sometimes it's not new behaviors. Sometimes you do some analysis and you realize that you should keep doing what you're already doing. That's okay. But then you know that you should keep doing what you're doing because you can justify it and explain it. And the last is recording relevant information to support those conclusions. As I said, anybody can say, well, I think that red's the best color because. But if you can support that with some sort of detail, we did a survey, we did a study, my child told me red was the best color, whatever you use to support it, sometimes that's just the way it goes.
And we use this process a lot in the audit approaches that we do, and I know internal audit departments and a lot of companies, I would venture most of management uses some of this analysis formally or informally to say, this is what I think, does the data support it? And then if the data does, then you can know how to move forward from there.
Absolutely. One hopes.
Yes.
Right? Darts in a dark room, sometimes also a strategy, but maybe not the best one. So I introduced this framework to attendees in January. Again, this is a good process to go through when you're doing data analysis to make sure that you're hitting these. Now, as Janice mentioned, I do like documentation, but documentation doesn't mean that you create tomes and books of information. What it does mean is that you articulate in writing what your intentions are, and it can be one sentence, but that one sentence sometimes can really solidify your thought or make you think of other things you need to consider. The way our brains work, writing things down helps us to put things down in a discrete fashion so we can evaluate it independent of everything else that's going on in our brains. I think that most people, if you think about it, have a lot of things going on in their brains, and writing things down helps us to articulate just unique thoughts. So we want to identify and articulate your goal. What are you trying to do? It doesn't have to be something monumental, but simple. Document the purpose of the analysis. What are you trying to achieve? Are you trying to evaluate, validate, confirm, gain an understanding of X, Y, or Z? But writing that down can be very helpful. Identify what data you need. It seems simple enough, but sometimes people just grab the data they have and start doing analysis, and then they realize that it is not the data that they need, or it's not enough data, or it's the wrong data, or it's not complete data. There's a whole bunch of traps that can fall in here. So identifying that first is good.
Yeah, one of our case studies later is going to talk about when you come to a conclusion, but you had the wrong data.
Yes.
Good analysis, wrong data, so then your conclusion is not correct.
Step 4, evaluate the data available, structure and content. Talked about that just a little bit. Document your assumptions and any potential impact on or influence on your analysis. You will not always have all the data you need in the best format in a perfect world. So you make assumptions about what that means, and you want to write those down so you can recognize what limitations you may have on the conclusions you're making. If you sample 4 people and they all say red is the best color in the world, and then you make a conclusion that red is the best color in the world based on 4 people, I think you might get assaulted with your conclusion by people who like blue or green, because you're going to find them real fast. But if your sample was 10 million people, there's 30 million people and everybody said red, then you can probably have a better reliance on that information. But you're still making assumptions. Step 6, design a model of analysis. What are you planning on doing? When we plan, we actually go through the process of doing something, and that gives us a run-through. It's a dry run. We haven't done any work, and it might take us 10 minutes to go through that quick run-through, but it helps us to structure what we need to do and how we're going to do it. Think about building a house. Everybody knows how a house is built, but everybody builds a model for a house. And if they don't, invariably, when you start building your house, you're going to run across issues. Oh, I can't put the plumbing there. Oh, the electric has to go here. Oh, I don't have any room for ductwork for my HVAC. And you want to, by doing a dry run, you can identify those issues before you start getting into the weeds and cranking through it. Step 7, articulate an expectation. It's real easy to start doing analysis and say, I'm going to see where this comes out, but then whatever results you get, people are really good at saying, oh, yeah, that's totally what I expected. It may or may not be true, versus, and actually we have a great example here in the month of March. Right, what's going on right now? Isn't there some tournament? I think it's baseball related.
Even I know it's not baseball, Sam.
March Madness for basketball. If you ask someone in a week if they thought that Kansas was going to win, and they had no predictions, they're like, oh, yeah, I knew Kansas was going to win. It's like, well, did you really know Kansas was going to win? It's easy to pick winners after the fact. It's important to set expectation and to sort of define what you think is going to happen beforehand, because it helps us to become better at predicting in the future.
Yeah, Sam always likes to pause me here when I say, Sam, I have all these transactions and all this data, and I'm in the middle of an audit, and I need you to do this. And he's always like, and why do you need that? And what is the purpose? And what are you going to do with the answer to that? And once we answer all those questions, it's very easy for Sam to move forward and do what I need him to do. But I want to skip some of those steps sometimes.
Well, it's on your brain. It's usually only takes a couple minutes to get it out. But yes, it is very helpful.
Yes.
So then we prepare the data, evaluate the model, and then we perform the analysis. You'll notice that performing the analysis comes much later than step 3. And steps 1 through 8 don't have to take that long. I mean, sometimes it's, oh, I've got all this stuff. I know exactly what I need. Here's what I expect. You don't expect to find payments to the cleaning lady for more than $50,000. Like that's a reasonable expectation. But by writing that down, when you see a payment to the cleaning lady for $52,000, then you're like, oh, well, that's a lot of cleaning. And you can dig in on those and home in on them. And then report on the findings. It's pretty self-evident. One thing about data analysis, frequently we're looking for positive results. Oh, this confirms what I thought. But there is such a thing as this quote here at the bottom, which is, we found no evidence to suggest that we could not rely on the results of our analysis.
You sound like you're testifying.
That's
I think you may have done that before.
That's exactly where I learned that, when I testified. But it's important to note that sometimes the analysis proves something, but sometimes the analysis just says, hey, it's probably this, but it also didn't highlight that there were any problems. We did this analysis and we didn't find any issues. And if someone says, well, but that doesn't prove it. Well, it's like, okay, well, you can't prove that something is pushing down on us from above, but we can think that gravity works. So you can do all sorts of tests, and you say, well, I'm pretty sure gravity works, but we couldn't find anything that it's not going to work. So we're just going to go with gravity works, and I'm not going to jump out of the plane without a parachute.
Good idea.
Yeah, thank you. Thank you. So let's talk about some of the case studies. So we grouped these case studies into 3 different types, and it's by the type of analysis that we performed on each of these.
I admit this is the fun part. We never got to this part in the last presentation, so
I thought the last presentation was fun.
no. It was all purpose and background and framework. I want to actually see it in action.
Thank you, Janice.
You're welcome.
All right, so this first case study is about data comparison and integrity testing. Yep. So a little bit of background. So this was $100 million plus company, and they were doing a system migration to some new accounting software. Lots of data. It was basically, I think it was 5 years of history from the old system, and they were moving to a new system. And of course, in their new ERP, Enterprise Resource Planning System, that just captures all their information and whatnot, they wanted to be able to run reports from one system saying, well, historically, what did our financials look like, and what were our payables, and how were we paying contractors, or whatever it might have been. So 5 years worth of historical data they wanted to bring over.
I like this example, Sam, because I don't always think of verifying that data is the same as an analytic, and we do that a lot in an audit. Does this invoice match the transaction in the general ledger? And we're comparing a lot of things, but this is massive amounts of data that would get you to the point of this is an analytic where you really want every data point to match.
Right. And frequently in cases like this, organizations make assumptions that, the new system will have all the old data, it'll be fine. And the next question as an auditor is, well, how do you know that?
Mm-hmm.
But frequently,
Not just as an auditor, as management.
Well, as anybody.
You're going to make decisions based upon that historical data.
So the goal here for this was to confirm the data migrated to the new system is the same as the old data, as the data from the old system. Their suggested approach when we spoke to this client was to do a manual comparison of accounts. They wanted 6 weeks of time from a staff person to visually review and compare reports from the old system to the new system.
That sounds very exciting.
It does. We had a lot of volunteers. We did not have a lot of volunteers. But the other thing was they recognized that they would not be able to look at everything, so we were going to do a sampling of accounts. So different accounts at different times to see what matched and what didn't.
Well, it's not like every data point has to match, Sam. I mean, it could be close, right?
You can make good conclusions based on sampling, right? don't you do that from time to time, Janice?
We do it all the time. But if I'm going to rely on all the historical data in their system, it would be a lot better to know it was 100% accurate.
100% is better. And we'll come back to 100% in a moment. So what we recommended to them was that we do a systematic comparison of accounts. And we used a tool called IDEA within our organization. 3 to 4 weeks of a technician. And we did a system comparison of the old system's data to the new system's data. So we ran reports from the old system for their AP, their AR, revenue, and...
You said $100 million company, 5 years
Correct.
Worth of data?
Correct.
That sounds like a lot.
It is a lot.
Okay.
But thankfully, computers are very good workers. So we ran reports from the old system, and we set up new reports from the new system so that we could match those and confirm that data came over correctly. Because what they were doing is they were migrating different sections of data at different times. So they would migrate some, and we'd do our test, and we'd identify if there were any issues. And at the beginning, we found small issues, but it was still, this is off by $80,000. This is off by $72,000. Oh, it's because of this. So they would tweak their migration process, rerun their migration. We'd redo the comparison very quickly on all the information for that migration step. And then once it matched completely, there were 0 exceptions, they would move on to the next migration step. So that's what we did. So why is this data analysis? So back to the definition of data analysis: inspecting, cleansing, transforming, or modeling data. So we weren't modeling, we weren't transforming. We were doing a little bit of transforming for reporting purposes, But really what we're doing is inspecting. We're doing a comparison. And then on the next slide, we're going to talk about the goals of data analysis and what this meant in this case. So in this case, did we discover useful information? And the question really was, did the information match? That's useful to management, because if it does, brilliant. And if it doesn't, then management and the migration team know that they need to take different action. Data analysis that suggests conclusions. Did the migration of data perform correctly? Computers do exactly what you tell them to. So if you tell it to do it wrong, it does it wrong. So when we were doing our comparisons, after we compared the information, if we found issues, we could then go back to the migration team and say, you missed this, or this isn't coming out right. Do you know why? And they could identify what the small tweak had to be. Because in general, it was very small issues. But when you're talking about lots of data and very complex systems, it can be easy to miss those tiny things. And then supporting decision making. Should additional work be done for past migrations or for future migrations? And by the time we got to the end of the migration project, we were finding very few issues, if any. And it was really just, everything came over correctly. Okay, do the next one. Okay. And they were doing batches of like 10, and we'd check 10, but we were finding no issues. But again, when the new system went up and came live, we actually had two valuable outcomes from this. One was the new system management had a high degree of reliance on the new system and comfort with it. But second, we documented what we did so that when we went back to audit this client, the auditors asked us what we had done and how we had done it, and then the auditors immediately had a higher reliance on the data for the financial audit. Mm-hmm. Janice, do you like that kind of thing?
I do like high reliance.
Back to your point about 100%. When we talk about data integrity, integrity is exactly that. It's like how perfect is it in its nature, and how much integrity does your data need to have when you think about it? Is it 100%? Is it less? If I told you that your data had 99% integrity and you only had 1% errors, what does that make you?
Which 1%?
Well, which 1%?
Depends.
Exactly. All of a sudden, it's like, it has to be pretty perfect. But how perfect? And when you start introducing the concept of things aren't quite right.
To a lot of companies, 1% of revenue is a pretty big number. In this example, 1% of revenue would be $1 million.
Right. And
I care about $1 million.
Sure. And sometimes it's also things like, 1% of revenue is $1 million. But if I said 1% of your transactions have errors.
Which 1%?
Yeah, which 1%? Because maybe it's all the small transactions, in which case it might be immaterial, you don't care. But it could be all high-value transactions. So now it's not just the quantity of the transactions, it's the quality of them as well. So data integrity is really, really important for organizations to recognize. And the answer to what is your threshold for errors in your data is most people say, I have no threshold because there shouldn't be any errors. It's not always the case, but you don't want to be looking at 1%. 1%, you're like, okay, now it's like what 1%? But if you're saying, 1 in a million transactions, okay, your processes and controls won't catch everything. So that was data integrity testing and comparison. It's a form of analytics. So let's talk about trend and outlier testing as this next case study group. Just jump back one slide, would you, please? So before we move on to this, let's talk about trends and outliers. So again, back to data analysis, and the purpose of it, it's to discover useful information, suggest conclusions. Trending of information is a great way to do this. But going back to the framework where I said it's important to set expectation before you start looking at data, if you have accounts receivable and you've been growing for the past 2 years, you would expect your AR to be increasing as well. Is that a fair statement?
Yes, typically that's what would happen.
Yes. So setting that expectation before you start digging into the data means that you'll be looking for a certain type of trend. And then if you do your analysis and you don't see that trend, you basically are identifying an outlier. That exception then becomes something you want to understand why it's occurring. Maybe your organization was growing, but your AR went down, and that's because your you got a new AR person and they're just on top of things. Brilliant. But there might be other reasons that aren't as positive as that. But being able to identify outliers means you first have to have an expectation of what should exist when you're looking at it. So we're going to talk about some examples of those. And the first example, Janice is going to talk about.
Yes, this goes back to the very beginning of my career. So that's a number of years. I won't say how many. You can look it up in my bio, I guess, if you like.
When you were 10.
Absolutely. But I remember it because I learned some valuable lessons here. So I was auditing an architecture and engineering firm. It was a limited partnership audit. We had lots and lots of data available and lots of old data, and it was not all electronic and not very easy to use and not well structured, as it says here. Paper. I had a lot of paper. So the goal is to audit the financials to issue an opinion on the reliability of the information in there. Are they materially correct? So if you move forward, what we said is, goodness, there's a lot of unbilled expenses here. And in this business, you would potentially bill them. So, they're obviously a line item on your receivables. You're going to pass them on to your customer as part of your projects. And we compared that to revenue. And the company grew pretty rapidly. We did a 5-year comparison, and unbilled expenses correlated to the growth in their revenue. They had doubled in size in that 5-year period. So those were very significant. So the expectation was that the increase of one would result in an increase of the other. And this correlated, and the charts looked beautiful, and the lines, and it was really good. So they tracked together. No exceptions were found during the audit. We thought we were good until 8 years later, I was subpoenaed. And what we had realized is through the cross-examination and through the days spent in court is that the comparison of unbilled expenses to unbilled revenue would have been a much better analytic to perform and would have been a much better metric to be measuring. So we started out with the wrong data set. Good intentions, a reasonable expectation, wrong outcome, wrong conclusion. So these two items did not track together. The unbilled expenses were growing at about 3 times the rate of the unbilled revenue at the time, and exceptions were found in this case after the audit. So what this really drilled home to me is the importance of getting the right data, the right expectations. And I think it's on the next slide. I actually jumped ahead a little bit. So the lessons learned were how you look at something influences the conclusions that you're going to make on that data. We had a bad conclusion. We didn't know it. The analytics that we performed and that we did made sense. We thought they were appropriate, but they were not defensible. And there were different ways of looking at that data, and we did actually reach the wrong conclusions in that case because we had set the wrong expectations. So it says here the original conclusion was not incorrect, but the viewpoint was not quite right, and it turned out that most of those unbilled expenses were not going to get billed to the clients and were not going to be collected, which was the problem. So to make good decisions, we need to ensure we have the right data and the right perspective, as well as the best expectations that we can have. And so it was a very valuable lesson learned there for me. I don't know if there's anything you want to add to that, Sam, with all your experience in using data analysis and data analytics.
Well, do you think there was like one question you could have asked that would have changed that perspective?
We did ask questions of the partners here of, are you billing that revenue? Do you believe you're going to collect those expenses? And we're talking little teeny tiny things like we mailed this and that, but they accumulated to millions of dollars. I'm not sure why we didn't look at unbilled expenses to unbilled revenue, but I certainly would today.
Right. Well,
hindsight's 2020.
Well, it's, yeah. I mean, everyone's has wisdom in looking at history. It's like, oh, I can tell you exactly what's going to happen. That's because you're reading out of a book. If someone can tell me what's going to happen with the March Madness, preferably if someone will predict that Kansas is going to win, because that helps my bracket.
It does. Very good.
It does. It does. So this next item, this next case study on trends and outliers, and again, some of these are pretty basic, but I included these just to highlight the importance of doing basic analysis. it doesn't have to be super complex. Sometimes the analysis on the surface is very straightforward to evaluate. It's, oh, okay, we just need to look at this. Now, going through the process of getting the data and making sure that it's ready to do the analysis so that you have good information to make a conclusion takes some time. But with trends and outliers, sometimes it can be something as basic as this next example. We have a boarding school. It was a small, close-knit community of staff and students, very strong values and a very strong history. And they contacted us regarding some inconsistencies in their accounting. So they brought us in, and we did some analytics on some different areas. And one of the analytics we did was we just did a comparison of total payroll by person by month to expected payroll amounts. It's pretty straightforward. Okay, well, Jane gets paid $40,000 a year. Let's see if she was paid $40,000, because the issue they had identified was that their cash balance was a little lower than they expected it to be. They didn't understand whether that was due to increased expenses or whatever it might have been. So our expectation is they're the same. We expect that, well, Jane makes $40,000 a year, that we will be paying her.
So I have to admit, that sounds like a pretty simple expectation. Most companies would say, of course.
Of course. But
I don't even occur to you to run that analytic.
Correct. and the reason is we make presumptions about the way things are based on our expectation.
Well, as an auditor, we would audit this, but an analytic to compare all of that data.
Sure.
Yeah.
So we did this analysis. Results were mostly in line. Trending was as expected. But we had 2 people with exceptions and outliers. And so we did some investigation, and it revealed basically that the individual in charge of accounting had been paying herself extra is the short answer. And the way that the fraud had worked is that they were paid on a monthly basis. All payroll was approved by the executive director of the school. But if you needed an advance on your payroll, you could get that. And so what she would do is she would go to the executive director and get an advance on her payroll. And then during the regular payroll run, she would not back that out. So she was getting paid. She was double dipping, getting paid twice. And then she had a colleague participate in the scheme as well. And it was very easy to identify just by saying, oh, well, here's when this occurred, and here are the months. And then, so it was all approved, but what had not happened was there wasn't a follow-up on backing it out of the subsequent monthly payroll. Easy to identify. It wasn't a complex situation, but it was really easy to see. The numbers were very plain, but when we put it into a graph, it just shot right out. So these types of analysis, very fundamental.
Yeah, a very simple analytic.
Very simple analytic.
There's nothing difficult about running that.
Correct.
It's just
Correct.
Most organizations probably don't run that analytic.
Yeah.
Or do you have all your salary information electronically?
Well, if you go back one slide, and this is one of the reasons I included this, it was a small, close-knit community and staff, strong values and history. And in this case, it was very, very high levels of trust between the individuals who were working there.
I can tell you I've seen payroll fraud of some sort twice in my career. One was duplicating 401k contributions and the company matched to themselves. That was actually an HR professional that was doing that. And another one was the person who was processing payroll who was also paying her 2 children's salaries. So it is interesting. It does happen. Luckily, in almost 20 years, I've only seen it twice. But unfortunately, it does happen.
Yeah.
But data analytics would have detected either one of those.
Yeah. And we it's important to note that we trust everyone you work with. For the most part, you trust them. But we still want to verify.
They probably wouldn't be working with you.
That's correct, yes.
No one's ever committed fraud that somebody didn't trust. You wouldn't put them in a position of trust.
That is absolutely correct. And I have gotten some pushback on this in prior presentations, and my challenge there is if you actually had an employee who you didn't trust, like when you walk past them, you did not trust them, they probably wouldn't last very long in your organization. I mean,
one would hope not.
One would hope, yes. Very good. So the next example is around Acme Corporation. Now, this is not a real company. There was some
Thank you for clarifying.
There was some concern within the group that this might be a real company and we shouldn't be putting real company names into these, which I did not. This is actually Acme Corporation from Bugs Bunny and the Roadrunner.
No one's that old, Sam.
I am. Now. I am now. It was my birthday yesterday, so...
So now you are older and wiser.
Yes, and all gifts can be sent to McKonly and Asbury. Sam BowerCraft.
We have a gift policy. Please disregard that comment.
Thank you. Thank you, Janice. All right, no more partners in my presentations. Anyway, so it's not a real company. But the example is from a real company. So it was a manufacturing company, very large, I think over $3 billion in sales on an annual basis. Well established across the United States. Very large sales force. I think 250 salespeople. So pretty good size. And obviously for a $3 billion organization, they had some pretty large sales. You know. So our goal was to evaluate some inconsistencies in the travel and entertainment expense, which had been identified through their internal audit group. And they wanted some further analysis done, so they invited us to come and consult on this. And we said, oh, well, we can do some analytics to sort of hone in. Instead of looking at everybody's or doing sampling, let's really dig in to the numbers.
You can look at everyone quickly with an analytic.
That's correct. So we did an evaluation of the travel and entertainment expense by person and by month and by year. We compared yearly totals to other individuals. You know, we all like the bell curve. You know, we expect sort of everyone. You'll have some people who have higher travel and entertainment expense, and some people who are lower, and then kind of a majority in the middle. So we looked at their yearly totals, and we evaluated trends and expenses. At the micro, we looked actually at the weekly and the macro levels. And our expectation was that they're going to be similar. Everyone's selling and traveling and expensing items kind of at the same time. They had a sales cycle. You know, more sales occurred at different points in the year and less at others. You know, you would expect that travel and entertainment expense would kind of cycle with those things. All things in business have a rhythm and a timing, and if you can identify that, then you can set your expectation and look for things that align with those rhythms, and of course, when they don't align. The result was a skewed bell curve. So most of the expenses were in line. Trending was expected, but a few people were living on the long right end of the tail. So we have two skewed bell curves here at the bottom. So if we had a whole bunch of salespeople who were spending less, we would have a negative skew, the diagram on the left. However, we had a positive skew, and this actually doesn't demonstrate it as well as it was. It was a much longer skew. That tail went out really skinny and long to the right. Because the average was about $25,000, and the top three spenders were each greater than $120,000 for travel and entertainment expense, which sounds like a really good year. I mean, I think I could have a pretty good time.
$120,000 of travel budget?
All right. All in favor?
Nice try.
Okay, well, we can talk about this later. So we ended up with several individuals at the far right end, and in digging into those individuals and their trends, we found significant issues. Duplication of expenses, personal items. In one case, it wasn't actually the salesperson, it was their admin who was abusing the travel and entertainment expense because she had access to the salesperson's travel and entertainment expense, because he had a huge spike of expenses during Christmas for some reason, which is actually when there shouldn't be any, because nobody's doing anything at that time of the year for the sales cycle.
Somebody had a nice Christmas.
Several nice Christmases. And actually, what's the next slide? Please. No, go back. That's fine. And actually, in her case, when they confronted her with this, So imagine this situation. She was confronted and said, we know you've been abusing the system, and we think you owe the organization $110,000. And she said, okay, what do you want? And I said, well, you need to repay that money. And she said, that's fine. If I pay you back right now, do you promise not to press charges? And at which point they said, you can pay us back now. They did not say they would not press charges. And she wrote them a check, which tells you what?
There's
Janice?
more.
There's more. That is correct. At which point they said, we're going to go back. We're going to go back further. And that's exactly what they did.
Wow.
Yes. When the person you're charging with fraud tells you that they can just cut you a check
For $110,000 cash.
Yes. Yeah, it's definitely a red flag.
Probably not all of it, because I imagine they would have spent a lot of it.
Maybe she was a saver, Janice.
Sure, Sam, sure. I do not believe that.
Probably not. So lessons learned. If you look at something, you can find some easy wins. And again, sometimes it's finding fraud. Sometimes it's confirming that you don't have to worry. Sometimes it's just identifying, okay, well, we feel comfortable with what we see here.
Negative assurance.
Negative
It's
assurance.
a very good thing.
Yeah. Simple evaluations can lead to significant findings. And don't underestimate trend analysis and how finding outliers can help you, especially with graphs. Frequently we want to look at the numbers, but the visual display of information can really help us to identify things very, very quickly. Looking at numbers can, is that bigger? Is that... But you can normalize things using percentages, and that'll give you a different kind of view into the information. But just a line graph or a bar graph can really speak volumes, either confirming what you were expecting or sort of identifying areas you need to dig into.
I still like my numbers, Sam, but I do see the value in the pictures and the graphs.
We can't make the pictures without the numbers.
Okay, there you go.
There you go.
There you go.
Okay. So our last case study, and I'll move pretty quickly through this, is reperformance testing. So this is a modeling example. There was a local tax collector. There was a fraud that occurred, and there were questions about distributions raised by the municipalities. The goal was to recalculate the distributions by the tax collector and compare them to actual payments. So basically, the municipalities have been paid amounts over several years, and they had questions about whether they were accurate. I won't get too deep into the weeds on all the complexities that went with this, but...
They're very complex calculations, correct? And lots of data?
Lots of data, lots of information. Fundamentally a simple calculation, but it's just like anything. Oh, that's simple in concept, but affecting it and coming up with the process and validating the process and then doing the analysis, those 10 steps of data analysis, we had to go through this. And ultimately it was good we went through those 10 steps because this work ended up in court, and I got to testify regarding the work that I had done. So that was very fortunate for me because...
So the higher the stakes, the more formality you need in your process?
I think that's an accurate
That's
statement.
the lesson?
Yeah. So we developed the process. We worked with the group. We wanted to evaluate how the taxes are paid by the tax office. We considered the data to reperform the process. We had to gather independent information for income for taxpayers because the tax bureau had not maintained records, so we had to go to an independent record set. And we gathered the address information for taxpayers. And we evaluated the data, made some assumptions about the data and the information, determined it would serve the purpose of the analysis, and then we designed a model for the analysis and the steps that we'd be taking. And then we performed the analysis. We recalculated the tax amounts due to the municipalities over the course of 5 years and compared those amounts to the amounts actually received. And then after I recalculated those amounts, I recalculated them again and double-checked everything because I knew that this would be of significant value to the stakeholders. So I checked and double-checked and triple-checked
And you also knew this was very complex.
Yes, yeah. Using control totals and making sure you have everything and that it comes out where you need it to be, and having those checkpoints is key in data analysis. Absolutely.
Sam, you
Yes.
called the case study reperformance testing. It makes it sound really easy. This doesn't sound easy.
It was not easy. It was not easy. Because I was basically doing something that they had been using a mainframe to do. So I had to basically build up that model again inside
So
a separate
reperformance
system.
may sound easy, and in some cases it will be, and in other cases it can be incredibly complex.
Correct, absolutely. There's a whole spectrum.
Okay.
Yeah. So we go from trend analysis, which can be real easy and straightforward,
Yes.
but trend analysis could be very complex as well. Yeah. Results: we found significant differences between the amounts that were calculated, that I calculated through my system, and the amounts that had been paid. Sometimes it's very important to note that you have to think about how you're going to present information to groups. Janice, do you have a thought?
Well, I was just saying, that's not really important if you paid more or less than you actually owed someone, right? Like hundreds of thousands or millions of dollars. I mean,
Hundreds of thousands of dollars,
Yes.
And in some cases, millions.
Yes.
So we had to really think about how we were going to represent this information because part of what we had calculated indicated that some people had been overpaid. And
By a lot.
by quite a bit, yes.
For a number of years?
Yes.
Okay.
The cumulative amount, yes, was quite significant in some cases. And so we had to report this to the group, and part of that required some forethought. So because, of course, what most of these municipalities thought the analysis would show, they thought it would show that everything was correct. So
they had an expectation, and your analysis did not meet that.
correct. It would be like getting a call from your employer in January, and they say, "Oh, we look back and we've been overpaying you by $400 a paycheck for the past year. Your original salary, so your base salary, which was $40,000, was inflated over the year. You're not entitled to that money.
Please pay it back.
Please pay it back." At which
I'm
point,
sure everyone could do that. Yes.
Yeah. And I'm sure that employee would feel completely happy getting ready to pay that money back. Yeah. So now that doesn't
This is
mean
good news.
that doesn't mean it's not right to do that, but it's not going to be an enjoyable experience. So we had to think about how we were going to present this information to them. What were they going to expect? What we were about to tell them, and then how they're going to react to differences. Because of course, same payroll situation. What if your employer came to you and said, "Oh, by the way, we've underpaid you by $400 a paycheck"?
Well, that would be pretty good news.
That would be great news.
And I would be shocked the person didn't notice. However,
But that person would probably say, "Oh, I've been underpaid. Please send me a check for..."
yes.
Exactly. So these were things we had to consider. So when we do these analysis, we have to recognize that what are we going to do with the information? How will it impact other people? Because especially in this case, we had spent a lot of time working as a team through this, but then it was impacting many other groups who had not been in those meetings, in those conversations, which wasn't, they didn't really need to be there, but they didn't have time to think about it, time to digest it, time to ask questions.
They weren't part of the process.
They weren't part of the process, and not because they were excluded, just because that wasn't part of the process. But then when it was time to report, you have to get people up to speed. How do you introduce those ideas to them? Things might not be as you expected them to be, and you have to sort of do a little hand-holding, and that's okay. But not everyone is going to get up to speed right away with you just because you've had the experience already. So, why is this data analysis? In this case, we did cleansing, we did transforming, and we did modeling, and then we were doing inspection. We did all 4 parts in this. Did we discover useful information? Did I answer these questions on the next slide?
Yes, you did.
Yeah, we did. Did the information match? Okay, in this case, did the payments match the municipalities? Suggest conclusions, were payments made appropriately or not? So our conclusion was that the Bureau had not been making appropriate payments, basically because the executive director had been committing fraud and manipulating the system. And how does it support decision making? Did the recalculation identify differences that may need to be discussed and acted on? So we identified the differences. Then the next question is, do we need to take action on them? Now, if you're underpaid, they felt very strongly that action should be taken. If you're
Obviously.
overpaid, they felt very strongly that action should not be taken. Sort of, the horses are out of the barn, let's close the door and just call it quits. But that's very easy to say when you're not out, multiple millions of dollars of money. So there's a lot of impact and complexity into these examples, but having a good framework and approaching these things in a structured way can help to make sure that things turn out smoothly. Maybe not necessarily the way you want them to, but that your analysis is supported and that you have a good, disciplined model for moving forward and making good decisions. So as far as your journey goes, if you're doing data analytics now, brilliant. And if you're not, it's always a good day to start.
I would be surprised if everyone isn't doing some level of data analytics, whether it's comparison, trends, year over year. I'd be hard pressed to find a business that wasn't doing at least some of this. Question is, I think, how much more should you be doing?
Yeah, and I think in this age of data, open the internet and you'll see articles on big data, artificial intelligence. Everything is stored in a computer somewhere. There's huge amounts of data. And the question isn't, are you doing data analytics? I think the question is, where have you decided to do data analytics? Mm-hmm. How are you actively choosing and deciding, well, I'm going to do analytics in these areas because these are high-risk areas, and I'm not going to do it in these areas because they're low-risk areas, or we don't have time. And that's fine. You can't do everything all the time. But as organizations in this technological age of wonder that we live in, it's really important to really consciously choose where you're picking to spend your time doing analysis in a thoughtful way. And it takes a little time. It takes time to plan. And frequently everyone is so busy doing stuff and getting things done that we don't set time aside to do the planning because we're all busy. And it's not a sin. But I think there's a huge opportunity to spend some time to be really thoughtful about where there's opportunity for this. So for step one is picking those areas, or maybe even just sitting down with some other people and saying, where should we be doing more analytics? Setting your expectations and testing your ideas and going through that 10-step framework to sort of wrap your head around the purpose of the analysis and what you expect to get out of it, and then how it can help you moving forward. How are you going to behave better in the future? Get the resources you need, ideas, data, people. Other people have different perspectives. And you might talk to someone and they say, oh, we should do an analysis like this. And you'll say, that is brilliant. But you won't know until you talk to them. It's hard to believe, but other people think differently than I do.
No.
I know. It's very bizarre. And that's a good thing, and I embrace that. I think that's fantastic. But you have to talk to people and ask them what they think. Sort of give them the same information and see what they come up with. Perform the process, as we talked about. Consider what you learned and how it informs your future actions, and then take action. Either it's going to change how you behave, or it's going to support what you're already doing. But this process is really about getting better information and moving forward. All right.
Yeah.
I can talk a lot.
Yeah.
So, that being said, I think we're at the end of this journey. Thank you very much for joining us. Janice, do you have any parting comments?
No, I just think, like I said, most organizations are probably doing data analytics of some sort, whether they think of them that way or not. And when you look at the data comparison or outliers or trends, a lot of this is being done in organizations. I think the question is, are you being very intentional about what you're doing and what the purpose is? And is that the highest and best use of your time? Because none of us seem to have enough of that.
Sure. And I think the quality use of our time is really what's at stake here. It's not just about activity, it's about productivity. And we can't know if we're being productive unless we're really thinking about how we're applying this stuff.
Yeah. I even look at your one example where it would have taken a staff about 6 weeks to only test a small percentage of the data and sample it, whereas you can test 100% of it in 3 to 4 weeks.
Correct.
What an amazing time savings. But if you don't stop to think about, could this be done differently, you would have missed that opportunity.
Right. Absolutely.
Thank you once again for joining us for this webinar recap provided by McKonly Asbury. We hope you join us for our future webinars, and you can stay connected to us and learn more about all of our upcoming events by visiting us at www.macpas.com. Thanks again, and have